I hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar and investor sentiment, which I'll go over quickly right now. Investor sentiment has been increasing to the bullish side quite dramatically. So as of November 13th, for the week of November 13th, it is right now sitting at 49.8% bullish and 28.3% bearish, which historical average is about 37.5% for the bullish. Significantly has increased, and you can see it has been increasing weekly ever since pretty much a little bit late of October and all the way leading up to where we're at right now. And then in terms of the bearish sentiment, pretty much not crazy in terms of ranges, right? But it's still lower than the historical average. So the market is quite bullish, but at the same time, it kind of goes against the charts a little bit. I'm going to go over that soon. But first, I'm going to go over the economic calendar before I get to the charts. And on Monday, November 18th at 10 a.m., we have the following. We have Home Builders Confidence Index. Then we have Chicago Fed President Austan Goolsbee welcoming remarks. On Tuesday, November 19th at 8:30 a.m., we have housing starts, then as well as building permits. Then at 12:25 p.m., we have Chicago Fed President Austan Goolsbee speaks. On Wednesday, November 20th at 11 a.m., we have Fed Gov Lisa Cook speak. And then at 12:15 p.m., we have Fed Gov Michelle Bowman speak. Then on Thursday, November 21st, at 8:30 a.m., we have initial jobless claims, which previously was at 217, this time around expecting 220. And at 8:30 a.m., we have Philadelphia Fed Manufacturing Survey. 8:45 a.m., we have Cleveland Fed President Beth Hammack welcoming remarks. And then at 10 a.m., we have existing home sales, as well as leading economic index. And then we have at 1:10 p.m., Kansas City Fed President Jeff Schmid speak. At 4:40 p.m., we have Fed Vice Chair for Supervision Michael Barr speak. And then at 9:45 a.m. on the Friday, November 22nd, you have S&P/US Services PMI, as well as S&P/US Manufacturing PMI. And at 10 a.m. we have consumer sentiment for the final. And at 6:15 p.m. we have Fed Gov Michelle Bowman speak. And so that's for the economic calendar for the whole entire trading week. By the way, I do post these videos up weekly, so if you want to be notified when I do upload my next video, consider following, subscribing, so you'll be notified when I do. I'm just going to make this image a little bit smaller. Now, first, I'm going to be looking at the S&P 500. This is specifically SPY ETF for the S&P 500. Same thing, just different ratio. Closed at $585.75. Now, this is an upward trend resistance line dating back since 2010. Mind you, the market was still going up. It's just every time it was going up, it was just pretty much getting stuck. You can see evidently between, like, for example, 2014 all the way to 2015, it was pretty much staying underneath the line guaranteed for the most part. And then we have upward trend support level as well, dating back since 2010. And then two major drops dating back since 2010 as well, potentially predicting the next third crash. Who knows? We'll see. But for the time being, I'm not expecting that right now. I'm expecting pretty much somewhat of upward movement all the way towards the end of the trading year, right? In terms of, like, for example, the Christmas rally and all that stuff, right? But basically what we're trying to assess is for this week. And for the most part, I would assume, because the sentiment is bullish, plus the volatility index is pretty much, for the most part, in the historical, like not historical, but like in the low range of the past few years, right? We're sitting at 16.13 right now, so relatively low. So volatility index low. The sentiment is in the bullish side, so you'd expect straight upside. But the problem is, if you're looking at the charts, for example, the 1 year chart. Now, before I get to the 1 year chart, just quickly, just FYI. So basically, this upward trend support level, upward trend support level, upward trend resistance level, and we still have more room to grow to the upside, right? So we could technically keep going until we meet this upward trend resistance line, and then potentially think that either we're going to just keep going up against it or come down once we hit it, right? Hypothetically, the only thing is, if you look at the 1 year chart, previously it was showing strong bullish movement to the upside. Now it's showing a crossover potentially to the bear side. Now it is still in the bullish side. This is the MAC line indicating if we're in the bearish or bullish movement. And for the time being, you could argue we're still in the bullish movement, but we've seen massive volume sales hitting pretty much last week. So massive volume sales, pretty high up there, right? It has increased too, and not even decreased. Like, we've had higher sale volumes, you could argue, previously, right, within the trading week, but it's pretty massive towards the end of the trading week, right? So there's that. So massive volume sales, selling volume, and then plus potentially crossing over to the bearish movement. It almost looks like, for example, Monday and Tuesday could be an up day, right? Because we were already coming down. You could have like not a dead cat bounce, because I think ultimately, in my opinion, by the way, this is all just my opinion. Please do own due diligence and research before buying, selling. But I think ultimately we're still going to keep going up because the sentiment is bullish, the volatility index is low. In terms of the next administration coming in, the anticipation of what could be happening, and so on and so forth, and plus Christmas rally, I think the upside is to come. But for the time being, with the crossover to the bearish movement potentially, and then plus massive sell volumes, and then technically you could argue when the market is too bullish, things tend to like break down, and then it's going to go against what people are expecting, right? But for the time being, it's almost like a dead cat bounce, probably Monday and Tuesday, and then the rest of the trading week continue to the downside. That's what I'm anticipating based off this, because even if you look at the 5-year chart, it was in the bullish movement pretty strong too. And again, massive sell volume, and then plus it's about to cross over potentially to the bearish movement. Now, not as much as the 1-year chart, but the 5-year chart is coming down for sure, right? Solid green there, light green there. MACD line, we are above the moving averages though, so that is a good sign still. And then for the 1-year chart, I believe we're about to approach the 50-day moving average. So potentially the Monday, Tuesday slight up, and then the rest of the trading week coming down to meet this moving average. And currently on the 1-year chart, the moving average, 50-day moving average, is sitting at $575.60. Again, we're at $585.75. This is ETF SPY, ETF for the S&P 500. Now for the NASDAQ, almost same thing, looking at ETF QQQ, but it's a little bit more dramatic, I would say. So again, looking at ETF QQQ, ETF for NASDAQ, same thing, just different ratio, has an upward trend resistance line dating back since 2010 as well, an upward trend support level dating back since 2010 as well. The only difference is in 2022, I believe, or 2020 to 2022, it broke through but came back underneath, had issues passing. In July of 2024, NASDAQ, S&P, and Dow Jones all created all-time highs, came back underneath, had issues multiple times to pass, and we did pass it recently, right? So I'm going to visually show right here. So we had a couple false breakouts, but ultimately it was a hard time to pass. Then we did pass it, obviously, with after the election, basically. Yeah, right after the election, broke through it again, and then we were the whole entire time above it, but now we came back underneath it. So given that we're back underneath this upward trend resistance line dating back since 2010, right? So right about here underneath, plus we've seen massive sell volumes. So you can see, just like the S&P, massive sell volumes, and it's about to cross over to the bearish movement even closer than the S&P. This is the 1-year chart. Again, MACD line indicating bearish or bullish movement coming down. Potentially just the same thing. Potentially could be bouncing on Monday and Tuesday. Not like a necessarily dead cat bounce, but probably retesting this upward trend resistance line dating back since 2010, and then probably not passing it, and then coming down to potentially meeting the 50-day moving average, which is about the $489.33. Again, $489.33. Currently sitting at $496.57. Will it happen guaranteed? Obviously not. It's not guaranteed. But with this indication plus the massive sell volumes, it's possible, right? So just be aware of that. And then the 5-year chart just looks exact same as the S&P 500. It was potentially bullish, and then now it's coming down to potentially bearish movement. Not evident as much as the 1-year chart, but the 5-year chart is still coming down nonetheless, right? Now, last one is the Dow Jones. And the Dow Jones is a little bit on its own league for the most part. It's been creating new all-time highs. But then if we look at the 1-year chart, it's doing the same thing as the S&P and the NASDAQ, where basically it's going to cross over to the bearish movement potentially, right? It's coming down. And the 5-year chart, I think it's slightly not as much as aggressive as the S&P and NASDAQ. So slight downside curve down, but not as much. And we could be coming down, but at the same time, the reason why I mentioned that we could be coming down, but it's not guaranteed to, is it could still reverse, right? So we've seen it before where it was coming down. You could argue it was trying to come down to a bearish movement, or it was trying to come down to a bearish movement, and it did come down. But the problem is it wasn't a full pull down. It reversed back up to the upside with a bullish movement to the upside, right? Now that was after the election too at the same time, so there's that. But still, ultimately, in my opinion, I think we're still heading up to the upside. Administration, all that stuff, Christmas rally, et cetera, plus the sentiment is a more bullish side, plus the volatility index is on the low side, except just the only thing is for this trading week with the 1-year indication, the 5-year indication, all that stuff, it's more to looks like to the downside for the time being. Again, except for the Monday and Tuesday. Monday and Tuesday might be potential bounce up to the upside and like look like a dead cat bounce, but then ultimately by the end of trading week, start heading down further to finish off with this 1-year chart cycle of the bearish movement potentially. Again, not guaranteed, just FYI, this is what I'm seeing. But that's basically it for today's video. Thanks for watching. I appreciate it. And if you have any questions, comment them down below. I'll answer them as soon as possible. Thanks again for watching. Take care. God bless and peace.